Good morning, gang. Good morning. Welcome to this week's quick YouTube update, where we're going to give a quick Bitcoin overview on the macro and more locally what's happening. Remember, everything to discuss today is not financial advice. This is just my view of the market as it stands right now. And I'm certainly not a financial advisor, before you get any bright ideas. So, high time frame. We're looking on the macro here, we're looking on the monthly. So the monthly is still quite clearly in a downtrend. We've not broken any form of structure yet, and until we take out these highs here and close a monthly above them, then there's no reason to start getting overly bullish. So as it stands right now, obviously we've got a high, we've got a low, we've got a lower high, and we've got a lower low. And the same can be said on the weekly. The weekly's still downtrending. Very, very straightforward. And we've said this on many videos now, but until we break out of this downward sloping channel to the upside or the downside, there's no reason to get overly bullish. You know, if we break out to the upside, then we can start to look for the next range. Now the next range would be the macro range that was here. And if you are on Twitter, then you'll see that pretty much every single man and his dog is looking at this level here, which is roughly about between 28 and 30k. Now, from experience, if you've been around the space for quite a while, when everyone's looking at the same level, you've got to be a little bit cautious, because Bitcoin likes to do one of two things, and that would be either front run the level or blast straight through it. But we don't know what's going to happen until it gets there, if it gets there in the short time anyway, that is. So that's a high time frame view. Now, when we start zooming in to the daily, we are still in a slight uptrend. So we're creating high highs and high lows. Now, we can start to see this clearly, that the uptrend looks like it's weakening. Now, that's not saying that the uptrend's over, but right now it looks like it's running out of steam because the higher highs are only just taking out the previous highs. But again, it's not really an indication that the market's over and that we're getting a full-on reversal, but it's just something to be aware of. So, you know, a strong uptrend, you know, would potentially look something like this. You know, where you're making very clear higher highs and obviously your higher lows as well. But, you know, in this instance, it's more consistent with a sideways market. But again, we don't know. You know, price could quite easily just moon from here and break back up to the higher range. But until it happens, you know, let's not get overly bullish or overly bearish. So, as it stands right now, price is once again trying to break back into this value area range, which is here. So we've got this value area high here, and price is trying to get back into it. Now, yesterday we saw price try to get back into it a few times and bounced with a significant bounce here, and then again another significant bounce here. So we were looking at this and we were watching this in the group yesterday as it was happening, because we've effectively got a smaller range going on within the overall range. So what we could say is we've got a smaller range going on like this as it stands now. In fact, I prefer looking like this. So this is what's happening more locally. Now, you'll have seen, especially from the moon boys and the overly bullish morons, is when we broke this high yesterday, you know, everyone was screaming breakout, 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 and we're back on, and, you know, everyone's then looking once again for 29k. But what I was saying to the guys in the group yesterday is that the first sweep is likely going to be a liquidity sweep. And why did I think like that? Well, first and foremost, if you were taking shorts, you had several opportunities here to short this range high. So therefore, what does that mean? Well, it means that there was likely a lot of stop losses within this area. So therefore, what happened was price squeezed up, and we could see it in real time. Price squeezed up, stopped out a load of positions, and then came back in. So if you were thinking about taking longs up here because you saw a bullish candle and you saw some volatility, then unfortunately it's not always going to work in your favour, and more often than not it's going to work against you. So if you did long up here, then chances are then you got stopped out on the move back down. We've then come back up into this region and then ultimately come back down to the local range lows. So when you see things like this, and you know, even if you look on the volume, you know, you saw this on quite big what people will consider bullish volume. But what people don't tell you is these volume bars on TradingView don't tell you what's happening within the candle. The only way to know what's happening within the candle is when you look at order flow software. This is how you find out what's going on in the candle. And we can see from the spike here, this was just a stop hunt. It was just a simple stop hunt. That's all it was. So there's no reason to get overly bullish when things like that happen. But obviously on TradingView alone, people will tell you that a high volume candle like this, that's a bullish candle because it's, you know, it's a green candle, or in my case it's orange, that's a confirmed break out of a range. But it's not, because what this isn't telling you enough detail. This is why it's important to understand the order flow and also take into account the context. You know, if you're not thinking like this, where you've got stops above this region to squeeze out these shorts, then chances are you're just going to lean bullish, and chances are you're going to try chasing this candle. It's not a good thing. In a bull market, you might get away with this sort of behaviour in an up-only market, but when you're in a sideways market, you're not going to get away with this sort of behaviour. More often than not, you're going to get stopped out. So that's where we're currently at right now. A small range. If we break these range lows, then we're back into that overall value area. And if we do get back into that overall value area, then let's have a look what could happen. So zoom back out to the 4 hour. Let's throw on the volume profile again. So if we do get acceptance back into this value area high, within this value area high, then I would be looking for a swift move down towards this point of control. And the reason why I believe it'd be a swift move down is because of this action here. Now, when we look on the TPO charts, we can see that we've got two areas of single prints here, or the whole thing could be considered an inefficiency. And chances are, if price gets accepted back into these single prints, then it's probably going to be a sharp move downwards. Doesn't have to be that way, but more often than not, that's how it works. So initially, we'd be looking to come down towards this point of control. Now, what else have we got at this point of control? Well, we've also got a fresh high time frame SR level, which is the daily level, which since it's been created, it's never been back tested yet. So on the first test, you might be looking for a reaction. We also have, from this low to the high, we also have a golden pocket. So this zone as it stands right now would be what I would consider an area of interest for potentially getting into a long position. Now, does that mean it's a long position then to go to the moon? No, that means I'm still trading the range. So if we do get a nice bounce here, nice healthy bounce here, and then start to move back up and we break structure to the upside, then I'm going to be looking back towards that value area high again. I'm not going to be thinking that this is then going to break out. I'm going to be taking profits along the way at any key form of resistance, because that's how you trade level to level. If price comes down to this level and it gets no reaction and comes back through, retests it as resistance, and then moves down, then you'll be looking down towards this high time frame level here. Again, it's a fresh level. It's a monthly level from last month's open. Lose that, then you're looking down towards your value area low here. Let's remove this fib so we see it more clearly. We've got the value area low here, which is the dotted line, coming in roughly around 19.5k, and then below that you've got your final high time frame level, which is the fresh daily level, down here at about 19.3. So this is not saying if price does break down here that it's going to continue down. It could do, but we don't know until it happens. But what we're looking at, we're looking for areas where we're potentially interested in trading. Throughout this whole area here, I've got no interest in trading because it's very thin, as we just said with a single print. So I've got no interest in trading here. So what I'm going to do is I'm going to wait patiently. I'm currently still in swing shorts from here, and I'm in swing longs from here. We also had a nice long here as well. So profits have been taken on this at the range highs. If this thing gets stopped out at break even, then it's a win. If these shorts taking profits here at the value area high, if then price reverses on me and stops me out, it's still a winning trade regardless. But I've still got a little bit left in this trade, so if it does break down towards the point of control or lower, then happy times. If I open up a long here, I'm going to be taking profits back up here, moving my stop loss to break even, and again, if it then does break out, happy days, you've got a decent trade that you can run. So that's how we trade level to level. And you know, you'll hear a lot of people say it on Twitter about trading level to level. And when you're in a range bound environment like this, it's the best method of trading. You know, don't just open a trade and hope for the moon, because chances are it's going to go against you at some point. You know, is the macro low in? There's an argument to say it could be. I'm not a fan of this structure, if I'm being honest. To say that a macro low's in, I'd like the liquidity swept underneath it, and then reclaim back up and then move on, if that was going to be the low. So we'll wait and see, but there is an argument to say that it could be in. But it's not how we work in the group. Now, if you want to learn how we trade ranges, then first thing to do, I'd say, is check out our website, spitfiretraders.com. The link will be in the description below. From here, you can access our free Discord with a hell of a lot of members, all sharing different types of TA. We've got many different styles in our Discord. If you do want to take your education to the next level, click on our co-pilots and check out what's in there. As it stands right now, we've got over 50 hours of educational video content to watch, everything from beginner through to advanced trader. And you'll also get 4 new live streams per month. Now, 2 of those live streams are where I map out my high time frame swing ideas. Not saying you trade along with me because they're not signals, but you get an idea of what I'm looking at in real time. If you don't follow us on Twitter already, again, links down in the description below. And aside from that, guys, trade safe, use risk management, and don't be dull. Alright, guys, take care. Bye-bye.